Are we in a buyer's market? Are we headed to a buyer's market? Or are we still in a seller's market here in Dallas-Fort Worth when it comes to real estate? Well, that's what we're going to cover in this August 2024 real estate report. By the way, I am Kallie, the broker and owner over at Ritchey Realty. And if this is your first time joining us, welcome. Please make sure that you are liking and subscribing because we want to make you the very best, give you the very best knowledge when it comes to buying, selling, or investing here in Dallas-Fort Worth. If you're a repeat person, welcome back. Hopefully we'll learn a few different things today. We're going to show you here when we go through these market reports, I'm looking at the four major counties, Dallas, Fort Worth, Collin County, and Denton County. So I just want to get that up front. So what's happening first off with the median sales price? Let's just go with that right out of the bat because I know everybody wants to know what's happening with sales prices. If you've been tuning into some of the online Zillow apps or realtor.com, you've probably been seeing a lot of adjustments. If you live in a neighborhood, you're probably seeing homes stay on the market a little bit longer. So yes, you are correct. That is what we are starting to see. So this is taking the median sales price through all those four different counties. And as you can see, we came up until about April, and then April, May, June, we held at a median sales price of $415. This July, as I kind of predicted, we did see prices come down, not significantly, but about $5,000 from $415 to $410. So, I kind of predicted this last month if you were tuning into our report because we were seeing more active listings hitting the market and less sales. So when we have active listings on the rise and we've got sales going down, well, guess what? Prices are going to adjust. Now, I'm going to come back to that here. So this is even coming from our senior economic analyst, Hannah Jones on realtor.com, even says when inventory rises faster than the demand, prices have to adjust eventually. Increasing inventory levels are a sign that the market is starting to balance out. Now, we're going to get into that in just a second. One thing I do want to share with you before you get concerned about the median sales price coming down a whopping $5,000, check out what has happened since January 2024, since January of this year. In the last 7 months, we've seen the prices increase over time. So if we were to look at it year to date, we still see prices have appreciated about 5.4% since January. So think about that for a moment. Don't let it concern you. We're going to see prices come up, come down. Now, where we end at the end of the year is going to be very highly dependent on what happens with interest rates. I think that beyond the presidential election or anything else that's happening this year is really going to be the economy and interest rates that are going to be a huge driving force. Now, for those of you that have your home on the market or thinking about putting your home on the market, please make sure you tune into this because our days on market have continued to incline. We're at about 51 days on market. What does that mean? Does that mean that you're going to be out of your house in 51 days? No, this is just an average days on market, but also consider this. It may take 51 days to get your house into contract and then another 30 days to see it close. So, because it does take 30 days from contract to close to happen. So keep that in mind. If you are thinking about selling, be prepared to have a little bit longer to take to sell a home these days. So let's talk about the inventory, okay? The month supply of inventory, which is the deciding factor on if we are buyer's market, a balanced market, which is also a neutral market, or a seller's market. So we can see here our month supply of inventory. And let me just kind of blow this up for you so you can see. We're hovering at about almost 4 months supply of inventory in the Metroplex. We started out with that way at about January. We've seen it come down. And like we have seen since rates have gone back up, we've seen that inventory has continued to increase. My expectation is this. In August, we did see rates come down slightly, which has kind of put a little spark into the buyers coming, back into the market and purchasing homes and hopefully more sales. If that does not happen this month for August, we're going to see the inventory continue to increase. So what does that mean? What defines a balanced or a neutral market? Well, if we look at, according to realtor.com, to all of the real estate gurus or, any kind of economic guru, they say that the month supply, if we're between 5 and 7 months supply of inventory, we're at a balanced or a neutral market. So as you can see, to answer the question, are we in a buyer's market? Not necessarily yes, yet. Are we headed to a buyer's market? Very possibly so. Very possibly so. We don't go into a balanced market. If I said buyer's market, please forgive me. We are headed towards a balanced or a neutral market as long as we continue to be on this incline. Because 5 months of inventory is just around the corner and could very well happen depending on what happens with rates and what's going to happen with that. I want to talk a little bit about rates. So, but before we go there, here's the Lawrence Yun from the chief economist at NAR says homes are sitting on the market a bit longer and sellers are receiving fewer offers. More buyers are insisting on home inspections and appraisals, and inventory is definitely rising on a national basis, not just Dallas-Fort Worth, but on a national basis. As a matter of fact, if we look at how many offers people are getting, remember, no longer are the days where you literally put a sign in the yard or even mention the word about a home coming on the market and you literally have 20 different offers in your hand. No longer are those days. On average, people from last year, sellers were receiving on an average about 3.5 offers. Today we're at about 2.9 offers per home. So that's a big decline in how many offers sellers are receiving these days. So sellers, don't expect that to happen anymore. I don't know how many times we can reiterate it. So if we were to look at, rates, interest rates, okay, when are we expecting to see those come down? We talked a little bit about this last month, but as of July 31st, the Fed's decision is in support of its goals. The committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. So we're maintaining as of August. But there is some hope, though. Here we go. The Federal Reserve stuck to script, holding monetary policy unchanged, but strongly suggest a rate cut is likely in September. The inflation data must cooperate for the Fed to follow through, but all indications are that it will. That's the story today. And I think we're going to try to stick with that story today. So what's going to happen, guys? September is going to be a huge indicating month. I know we've got the election right ahead of us. And if you want to hear more about those impacts of that, please go back to tune into my videos last month or the month before. My prediction still is holding strong for fall. I hope that as long as we see those interest rates come down, we're going to see a pickup in the market. That means we could have more listings hit the market because more buyers or more people who are pent up demand are going to be out on the kicking the streets and finding another home, and they're going to have to list their home. So it's going to be an interesting fall. So tune in next month and let's see what happens in September.